Good evening, this is Nick Inman from VolumeProfileTrader.com on Friday, November 4th, and this is our weekend update. We're just going to jump right into the S&P 500 here, look at the day's action, look at a few volume profile charts, pick out a few names for you guys to consider over the weekend, and then we're pretty much going to wrap it up from there. So basically, yesterday I was saying, it probably makes sense to sit on your hands because the jobs report came out today and it was lower than expected, but the market kind of shrugged it off. And the reason why I say that is because it closed only 5 or 6 points below where it closed yesterday. So despite the fact that it was poor news, the market, I guess it expected that in a way. So another thing to note from today as far as price action was we had an inside day, and what that means is yesterday's range completely engulfed today's range. And from a day trader's standpoint, that is a sign of low risk and low reward type of day. There's not a lot of opportunity. Now, you can say, hey, Nick, yeah, there was. Look at the 15-point swings that we had today. And I would say, yeah, I totally agree with you. If you personally, during the morning time, I like to day trade the S&P 500. And this morning, for example, there was some great opportunities to profit. But overall, in terms of a direction from one way, I guess, to go to higher levels or lower levels, we didn't get the information we were looking for. And that's what we were waiting for with the jobs number. So that's all right. That's trading, and you just accept it. It was Friday, so a lot of people don't do much on Friday. So overall, it was pretty much a do nothing day, unless if you caught, you day trade and you caught the swings throughout the day. Then bravo to you. But for longer term traders, even if your time frame is a week, today was a day to do nothing, except for take risk off the table. So let's look at what we did for the week. Obviously, we opened higher and traded lower, traded to that October point of control. And just to be fair, I'll zoom out to that level. Okay, I zoomed out one. So this volume profile chart here on the right, this is our October point of control. And right here we're seeing the week's point of control. This is the week's volume profile chart. So you see what happened here. We had our trade-off and then support at October's point of control, a little bit of sideways movement, and ultimately a move higher. And as we started trading in this higher range, by the way, quick lesson, resistance, breakout, what's resistance come after on the test back? It becomes support, and that's what we saw here. So overall, we are short-term bullish. We are moving higher. But one thing to note is this point of control for the week is at the top of the range, and if price has trouble staying above these or around these levels, 1246 and higher on the S&P futures contract, just watch out for more downside, because generally speaking, when that point of control is at the top of that range, it gets a little top heavy, and any selling pressure that persists tends to knock the market lower. So just like on Tuesday when we got that point of control at the bottom of the range and bam, a nice springboard higher, we're seeing the same effect, or we could be seeing the same effect with this point of control at this range right here with current price. So overall, we are, for the week we made higher highs and higher lows after we, made our bottom for the week. But, for the week we are still down. So what's that saying? Well, it's saying that there's not much to do, and if we need to zoom out more to see what the bigger picture is telling us. So as we zoom out, and this is now our October point of control, and this is our 3-month this is our October volume profile chart with our October's price action. And this is our 3-month volume profile chart. And you can see our point of control for 3 months is at 1185. Value area support or value area high is this 1035 level, which is November's point of control also. So we have a little bullish setup here. We're getting our 3-month volume profile chart. We bounce off the October point of control, start to move higher, and now we are bouncing off November's point of control and the value area high. So this is making me, just looking at the charts and trying to forecast what's going on for next week, it's making me believe that we could easily see more upside. This 1260 level that we tested yesterday, once we break above that, it's off to the races, and we're going to test the 1265 level, which was Monday's point of control, and then 1280 to 1290. Now, the unfortunate part about moving higher after we saw the early sell-off at the beginning, at really mid-year, is, and let me get rid of this name. Okay, here's our daily chart of the S&P. But where I'm getting at is the big money, the longer-term money that continue to hold throughout, through this big downturn, and they're in for the market for the long haul, and they want to see higher prices. Well, not all of them have the thesis that the market's going to continue higher. So on this back test we're seeing right now, you can see this. There is, looking at this is a year-to-date chart, and you can see from the volume profile standpoint, we are coming into some heavy volume, and what that is going to lead to is some selling pressure, regardless of the fact that we had this huge market sell-off. Now, the shorter-term time frame players, they've already sold. They sold within this downtrend if they didn't sell at these levels up here. And so a lot of them were in cash at these levels, down at the 1100 to 1200 level. And now that we're seeing upside, we saw this breakout and they started to put more money to work. Likewise, the rest of the market players. But we need to watch out. This 1283 level, which was this point of control back for the last couple of months, it was the point of control over the last 3 months over the summer. You can see we stopped dead in its track. Here's our volume, or our point of control, and our highs were not, barely pierced above it. So that's definitely some resistance. And then if we do get above those levels, then 1300 to 1325, ultimately that 1325, which is the point of control for the year, that's a huge level. And that's, if we do break above that, then it will definitely be, I see that the market should have no problem testing 1400, but that's a long ways away. So right now, short term, you can see this whole moving average, the yellow moving average, it's moving straight up. So we are still, in a bullish phase right now, but we are coming back into the resistance zone. So watch out, and you never know what may happen. Now the Nasdaq year to date, our point of control is a little lower, and you can see we tested that last week on the highs, and we sold off from it. So it will be interesting to see if this recent uptrend that we're seeing will continue, and we can test the top of the value area for the year. If not, then this 12 I'm sorry, this is the Dow, not the Nasdaq. My apologies, but regardless, it's the same idea. This 12,250 level, that's our line in the sand, and right now the sellers are in control, but the buyers are still pushing us up towards those levels. So it's going to be interesting to see what goes on. Now, if you actually want to see the Nasdaq this time, This is interesting, guys. The Nasdaq is above its year's point of control. If I zoom in a little bit, you can see, maybe not that much, but you can see that we had some sideways consolidation over this past month or so, right at this point of control, and we're staying above it. So we're looking for more upside in the Nasdaq, and there's not a question that the Nasdaq's been outperforming the overall market. It's been clear as day. You can look at any chart, and the Nasdaq's hanging in there, probably thanks to names like Apple and IBM and other various names which have a large weighting in the Nasdaq. Now let's cover gold and see what it's doing. We're seeing more of the same from gold on a daily time frame. We got our nice bottoming pattern. And here's, guys, look at these examples of what the point of control can tell you in a given market range. Take gold going back from the beginning of the year, really going back towards March, and look where the point of control forms, and look at what happens with price after it pretty much elevates above those levels. Here's point of control forms at around 1425 on the gold futures contract, and bam, a nice move higher. Likewise, the next couple months, the point of control forms at around 1530. Bam, a move higher. Guys, what are we seeing again? The same formation. 1640-ish, point of control, bam, a move higher. Now, this is just the pattern that we keep seeing with volume profile and the use of it, and how we can effectively put it into our trading arsenal to help us get the edge needed to make those profitable trades throughout a year. Now, as far as silver goes, we had these. Silver's been a lot more volatile, obviously, and what we're looking for silver is a little more of a balanced range. And if I just connect the dots after I get a trend line, if I just connect the dots, you see there's some potential for resistance at this 39 level, if price got to those levels. But first things first, we have to beat this annual point of control at 35.70, which literally was the high almost to the penny in this recent run-up in silver. So short term, the silver's definitely in a consolidation pattern. I don't think there's any bias. I don't think there's really a trade on silver. If you like to trade options, perhaps you could sell some out-of-the-money spreads to collect a little bit of premium, assuming that silver continues to trade sideways. But until silver, from a bullish standpoint, until silver breaches this point of control for the year, I think it's a do nothing. Your downside's 31 and your upside's 35, so it's a pretty tight range, tradable on the extremes, but I wouldn't go much further than that. And the last name I'm going to cover in terms of futures contracts is oil, because oil matters, and it's a similar relationship. We got our nice bottoming pattern in oil, and now we're testing the year's prior prices, and that point of control at 98 to the value area high at 101 to 102. That's our target, guys. So oil trading at 94 and some change, you still have some upside potential. I don't know. Obviously, you're late to the party because there isn't much reward, but I don't think there's much risk either. I think 90 is your downside target, so from a risk-reward standpoint, you have about a 1-to-1 ratio. So it's not great, definitely, but it's not bad. Now, I wanted to cover a few names. I'm going to do something new here. I'm going to cover from CNBC's Option Action Show. I'm going to cover the trades that they propose going into next week, look at the names technically and from a volume profile standpoint, and see if there's some true opportunity. But I'm just going to give my honest opinion, and I'm not going to say one way or another if this makes sense. You know, in terms of taking their trade, I'm going to tell you what their trade is for you interested and didn't catch the show. So first things first, there was a trade strategy on Csco buying the 19 by 20 call spread for 20 cents expiring in November, and this is a play on earnings. So what they're expecting is basically for Csco to gap up or to trade up to this $20 level. And I don't even think it's that bad of an idea, only because our point of control is at this 17 level. So Csco, another thing is Cisco's been hammered from 27 down to 13, basically a 50% correction. And now we're looking for some more upside. I like the fact that this point of control is below price right now. I think there's more upside to Csco, so overall I think this is a pretty good trade. As far as the implied movement, they're expecting a 6% move on earnings. That's what the option contracts are pricing in. So this call spread 19 by 20 for 20 cents, you can quadruple your money over earnings if Csco rises to that $20 level. If it does not, and Csco trades anywhere else, whether it be down or sideways, you're going to be out 20 cents times however many contracts you entered. The other trade proposal was on Priceline, and this was a selling of a put spread, the November 505, which is right around these levels, right below today's close. So 505 they sell, and they buy the 465, which is right at these recent swing lows. And what they're expecting is for Priceline to stay above this 505 level and, ultimately appreciate. They announce earnings also, and as far as I don't really like this trade setup, not necessarily saying that Priceline won't move higher, but you're collecting $16 on a spread worth on a $40 spread. So you're collecting about 40% of the premium that the spread is worth. So it's not bad, but considering it's going over earnings, you have to have some true conviction that this is going to move higher or at least stay above that 505 level. Your break even on the trade is 489. So I don't really like the trade, but as far as Priceline and potential price action, I think Priceline can move higher, but I wouldn't be surprised if it moves lower also. The year-to-date point of control is at 1010, right where current price is. So it's hard to say one way or another what Priceline could do. Now, I personally wanted to cover some names that I think have some great potential for upside. One of them is Avgo Technologies, and this is a semiconductor. It's in the semiconductor sector. And what I'm looking at here is for the year. Let me zoom out one more. Obviously, going back to 2010, we've had a monster rally from, call it $14 up to as high as $40. And now we're getting our sideways consolidation. But this point of control at $33, price is staying above it, and the last 2 days it has. And what I'm looking for now is for potential for some more upside. And I think that if we do see upside, eventually you can have your stop right below 33 or this point of control. And right now it's hard to say that this is a right here right now, only because if you put your stop below 33, you can see that hasn't worked out that hasn't worked out well. You would have gotten stopped out every single time. But if I zoom in one, and what we're looking at here is a 4-hour, 180-day chart. This is our 6-month volume profile chart. And I see the 200-day moving average, the yellow line. It's still trending higher. And the 50 and 20-day are basically smack dab in the middle of price. And I don't think it's telling you, this is right here, right now. But I don't think we're far off. I think you can start scaling into this name with the expectations of a move higher. And your targets for upside would be $37 to $40. It's your choice on, your ultimate target. But if we do break out, those are the first 2 price targets. If we break out to new highs, I wouldn't be surprised to see $50. But this is starting to set up into a very nice pattern, a little bit of a squeeze, looking for more upside. Oh, and by the way, this company is growing at about a 20% rate. So it's a growth company. So you do have definitely potential if they come out with earnings. Let me tell you what earnings are. Earnings are December 8th. So one thing we may see is a run into earnings, which is very common. And what that means is basically a stock runs up into earnings and then basically anticipating good earnings, and then a sell in the news. Once earnings come out, it sells off. Of course, sometimes it keeps going. So if Avgo Technologies, AVGO, starts going to the upside, this is why. You see what's happening. We got our sideways consolidation, and price is sitting above the point of control. So we want to see more and more buyers come into this and raise this stock higher, basically so we can make some money. Anyways, guys, I hope this helps. This is a pretty lengthy video. I want to continue to spread the word about volume profile and how to use it to make market decisions. My website, volumeprofiletrader.com, it's up, but we're still working on getting our members section so we can start providing a great service for people who want to trade better and want to become better traders, want to learn more about volume profile, and basically get some good trades and make trading, fun and exciting and profitable. It's a very great thing, and using, the use of volume profile puts the edge in your hands because you understand what's going on at each price level and how important each price level is. For example, the point of control, that's the most important price level in the entire composite you're looking at. And you wouldn't know that you wouldn't know what that price is without volume profile. And from doing my videos, if you follow, you can definitely see that where the point of control is relative to price and relative to the range. It matters, and it gives opportunity to profit. So I'm going to leave it with at that. This is a really lengthy video, but it is the weekend update. I hope a few of these names give you some trading ideas. I hope you get a better sense of where we are in the market, and I hope next week brings great opportunity for profits. So everyone have a good weekend. I will see you on Monday. Bye.